Welcome to Momentum Investing, property investing made easy. One of the world's top podcasts on property investing, bringing you the top experts in the field so you can learn firsthand what it takes to create passive income and take control over your financial future.
Hi, welcome to the Momentum Investing podcast, where our goal is to help you get the tools you need to reach your financial goals and build your property portfolio. My name is Daniel Wood. I'm one of the founders of Momentum Property Education, and welcome to the show. I'm really excited to have you here because in today's show, I had the pleasure of interviewing Vanessa Liu. Vanessa is the VP of SAP.io. Now, it was a lot of abbreviations. She is the Vice President of SAP's Venture Capital arm. So SAP is one of the largest software as a service companies, and this is the venture capital where they invest in new companies, which was really, really exciting because on the Momentum Investing podcast, we've had mainly large investors and experts in the property industry and other industries join us. We have people who've looked at how to elicit investment, right? How to ask for money. And like in our last episode, we have Staffan and Caroline, two new investors who are starting their journey. It was a great episode, how they shared their journey and the challenges they've overcome and how they've actually started building this cash flow, which is really, really exciting. In today's episode, everything's going to be a little different because Vanessa is the one giving out the money instead of the one getting the money. So today we're actually going to hear what is it an investor is looking for? What do they hope to achieve? And what do they hope to get out of a potential investment? This was a very, very powerful episode, really exciting to me. So stay tuned, have fun. This is going to be great. And at the end, I got a little surprise for you. So make sure you stay to the very end. All right, welcome to the Momentum Investing podcast. I am here with Vanessa Liu. We're so excited to have you here. Thank you for joining us.
Thank you so much for having me.
Yeah, super excited. I mean, you've done so much in your career. Among them, started two companies, and today you're the VP for SAP.io, meaning you're actually investing in companies and people. So we have a lot we want to get into with you and learn about how is it you choose your investments? How do you pick, where between two opportunities, how do you choose the right one? How, when someone comes trying to raise finance, how do you do it? Because we obviously all want to get better at raising finance. And as an entrepreneur, as a startup, you've started two companies, which is incredible. It's hard enough to do it once, and you've done it twice. So I'd love to hear there a little bit about what do you see as like the major challenges that new startups face, and how did you kind of overcome them?
Yeah, so starting two companies at the same time was not by mistake. It was actually by choice. And so I teamed up with a business partner, and we created a venture startup studio. And what's so interesting is that there have been many, many iterations of startup studios over the last couple of decades. And what we took was the ability to look at companies in the media publishing space. It's a space that both my business partner and I knew really well. We also had a business model that we knew really well. How do you launch email newsletters? And so we thought from the get-go that we wanted to launch at least a couple of these businesses because we had the blueprint to do so. We had the playbook, we knew what it would take to succeed, and all we had to do, and it looks very easy in hindsight, but it's so not, we just needed to find the right people to bring in on the team to lead those businesses. Right. And so much of the time, I think doing it is one thing, and learning it the hard way, that the chemistry with the right leaders, that's something that you just can't tell off the get-go. Like, people can interview extremely well and they could be great for that first period in a business, but once it starts scaling, what you find is that a lot of the times you actually need to turn to other people with different skill sets to take you through that period of growth. So we experienced that in our businesses, but it's what we've seen is that, yes, of course, like having a great idea is just a part of it. Having an A team is probably 90% of it, with the idea being 10%, because it's about the execution and making sure that you can have a good team in place that could make the right decisions and prioritize the time effectively to go after the right opportunities.
I love that. I love that. And I love how you kind of say the idea was kind of easy, you had it all, and then the trouble started once you actually began.
Yes, yes.
Usually how it is. I mean, it's the same in property. Obviously, it's like I'm going to buy some property and I'm going to rent them out. That's easy enough.
Easy.
And then you begin and it's really hard. And I agree, the team is such a key. If you have the right team around you, everything is so much easier.
Mhm.
But so what kind of challenges did you face in that process of scaling, of building, of creating businesses?
So what we found was a couple of things. One is when you are trying to build out this business and you know what type of customer to go after, basically who do you want to go with, there's a lot of a chicken and egg type of approach that happens. Like, for instance, in order to secure that big sponsorship, you don't want to tell the sponsor that, hey, you're the first and only customer that we've had to
Yeah.
date. Right? How do you really get started? You almost need to show your track record to some extent, of course, to obviously conjure up the confidence that's required in order for, like in the media publishing business, it's about the advertisers, right? For the advertisers to believe in you. And so a
Yeah, that's
lot
such a
of that
catch-22. And
cash
it's the same
22.
for property investors. It's like, well,
Yeah,
if I don't get the money to do my first deal, I can't do my first deal to show them my results so I can get my first deal.
exactly. And we see that in enterprise tech all day long now at SAP. You are trying to go after a Fortune 2000 company as your first customer, and then they ask you, so who have you worked with if
Yeah,
you're a
well,
startup?
hopefully soon you.
Yes, exactly right. And it's the art of creating, essentially in enterprise tech, we call POCs. So basically proofs of concept.
Yeah.
Can you do that then in other settings so that basically you can foster that type of trust and to prove
How would you
that you
do
can
that?
execute?
How would you, like, if you don't actually have a client, how would you create a proof of concept?
It could be as easy as saying, like, look, we know that you're very interested in this solution that we have. What is the pain point that you're solving for? I really believe that when it comes to selling, it's not about selling. It's about helping someone or an organization solve their problem. So
Right.
can you really be that thought partner to help them do that? And and then to say, like, look, at no risk to you, just your time for an X amount, an X period of time, we will show you what it's like to work with us to see if we can help you solve that problem. And if you're happy with it, like after a certain period of time or certain milestones are reached, then we can agree to some type of an arrangement where basically it makes sense to be compensated on that going forward. And so it's not, of course, it's not never anything is as simple as that, but that's the concept that
Right. So essentially you
you,
say, look, we need to get a client on, we'll work for
yeah,
free a little bit, we'll prove that we are worth getting paid, and
right.
then hopefully you actually deliver what you promise.
Exactly. Like there's this one company I've worked with. It's the company is called Ventana, Ventana. It's an augmented reality company. They
Oh,
basically
cool.
convert files. Yeah, it's really cool. They convert basically like photos that you have and they turn them into 3D models and they do it at a very cost effective way. Actually, for property managers, that's amazing, right? To be
Yeah,
able
exactly.
to
Take our floor plans and just
Mhm.
Minority Report pull them up. Yeah.
Exactly. Or if you need to superimpose furniture in a room and you want to show what that looks like, it's the furniture photo that could be converted into 3D, so you could layer it on.
Right.
And they're incredibly smart about it. So they've been working with retailers like Adidas or Cotton Ink, helping them convert their files to 3D. But in the beginning, they would basically say like, hey, just give us a few of your files. We'll convert it to 3D. We'll show you how quick and cost effective it is. And if you like it, then you want to keep the images, great. Then you pay us.
Yeah.
And so that's like a very, very easy way of hooking people on. And so trying to figure that out for your business, I think is one of the key parts of success.
So how would you do it? So now I'm going to kind of put you on the spot here because this was really interesting. But say I am a new property investor and I want to, raise money for my first deal. Obviously, it's hard to do it for free because I need the money to do my first deal. But how would you kind of angle it in a way where I could bring someone on and let them feel a low amount of risk?
So maybe it is as simple as saying like, look, when it comes to this particular deal and thinking about the structure of the agreement, it might just be, for instance, let's think about the value added services that we can provide here. So I'm making this up because
Oh yeah, yeah, no,
I'm
no,
not a property person at all. but for instance, let's take a hotel property. That's what you're trying to develop, right? And you can say like, look, in order to mitigate the risk for you, what we can do is say like there's going to be retail in the hotel. And then we can set up the arrangement so that there is some type of, sweetener where you can get more of the revenue share coming from those retailers than what you would normally see. And being able to understand like what are the industry standards and being able to like tweak that a little bit so that that person who wants to take this particular agreement can see whether or not that makes sense. I think that's it is about looking in the confines of what is the solution space and just saying like, look, we're going to bear the risk a little bit more just so that you can be comfortable in terms of what it's like to work with us.
Right. Yeah, no, I like that. And I mean, there are lots of ways as a property investor for me to show that I'm creating that value. I mean, I could give you a personal guarantee. I could, as you say, increase your share of the cash flow. So there's a lot of different ways. I really like that. Looking at, and as you say, the value add services. I mean, this might be someone who wants to get into property. Maybe I can let them be kind of shadow me a bit like a free mentorship.
Right, exactly. I think that all makes a lot of sense, and it's interesting because it also falls into a lot of career advice that I give to people who are younger when they say like, look, what should I do to land that first job? And actually a lot of it is just saying like, look, I want to help you. How can I help you, person X, and your company, and actually showing that it's not just about showing up in an interview, it's about going above and beyond.
Yeah, actually seeing what they might need and being able to anticipate that a little bit.
Right.
Very cool. All right. So now if we change tacks, because I really want to hear how it is to sit on the other side of the table now and be the one kind of doling out the cash instead of the one asking for it all the time. How do you go about it when, so I'm sure you got companies coming to you pitching and wanting finance every single day. I mean, your life must be like a Shark Tank boardroom.
So very similar.
Pick, yeah. But so when people are coming in pitching, how do you make those kind of decisions and what kind of due diligence goes into it? Is it quick decisions? Do they take time? How do you go about it?
Yeah, and so the work that we do, it's twofold. One, we do have our fund where we make investments in companies. The second part of what we do is we run accelerator programs, which are no equity, no investment programs, but which are even more competitive at times than our fund because it's about having a short circuit way of partnering with SAP and becoming a go-to-market partner. And so, obviously everything that we do has to have a strategic lens. But that aside, when we look at companies, a lot of it is looking at the entrepreneur themselves. Like, what is the founding team like? How coachable are they? And how do they look at things and think? You can actually tell so much about a company in terms of how they respond to you during those early emails, just to see, hey, we'd love to learn more about you. Can we set this time up? How do they present themselves in a meeting? Do they really know their story down pat? Or there's a difference between, of course, like first-time entrepreneurs and those that are serial entrepreneurs who are experienced, but a lot of it is down to really getting a grasp of what is the pain point that you're trying to solve for. how distinctive is that? Do you have some type of secret sauce to solve that particular problem? So that those are some of the things that we look for. And obviously, because we are able to, we look at traction, just how much traction were you able to get in a short period of time. Like what we see is that some companies like have spent maybe 5 years building something and they've been so scared to go out to the market or to really go after particular opportunities. And that makes you realize that, you know, that company might not make it because they're just not aggressive enough. They just don't have that will to go out and take the risks versus others that have taken calculated risks, not dumb risks, but calculated
and that's
risks.
the other side is people who take dumb risk, and that might be better to avoid as well.
Exactly. It's like, wow, that was a very brazen risk that you took, and why did you do that? Take us through that, you know, that type of thinking. And so like we view things as partnerships with all of the companies that we work with. And so to date, we've worked with over 250 startups over their last 3.5 years, either, you know, by being investors or by accelerating these companies.
What does the accelerator program mean? What does it mean to be a non-investment, non-equity partner? That's obviously a industry lingo.
Yes. So if you think about, if you're a small startup, an enterprise tech startup, and you want to sell to the Fortune 2000 types of companies, having a partner like an SAP would make a lot of sense because they have those relationships already. They could walk you in the door. But not every startup can have that type of privilege to do so. So you could try outside in to become a partner of SAP, navigate our behemoth of 100,000 people in an organization and find the right people to help be your champions. And that would probably take you at least 12 to 18 months. Our accelerator program shortens that to 3 months. And so you know where you need to integrate into. So for us, it's about finding startups that provide point solutions to pain points that our customers have. And we can then put this onto our products and technologies so that customers can access those startup innovations right away.
So essentially that way, you know, you don't need to put any money in because you're just going to give me instant business by saying, well, I provide the 3D picture solution. These 50 clients will need this service, so here you go. Here are the introductions, kind of thing.
Exactly right. That's exactly right. Yeah.
Cool. So what's the no equity part? Does that mean SAP doesn't take any ownership in that company?
No. So for those foundry programs, it's no equity. So we don't take any ownership positions. And the reason why, it's because we want to be stage agnostic. So we can work with companies that are very early. So they might have only 5 people to those that have, you know, maybe like 100 people who are Series C. And you know, if you're a Series C company, you might not necessarily want to give up equity for in exchange for a partnership. And also we want to be honest brokers so that we can tell our customers, like, look, you should work with this company. We don't have any skin in the game, but we could tell you we've seen so many companies in this space and we're very excited by them, which is why we're bringing them into our ecosystem.
So what's the benefit to SAP in that case? Because it sounds like an awesome deal for the startup. Yeah, just give me your client base. I'm happy with that.
Well, for us, our customers are constantly asking us for what are some of the most innovative solutions that we're seeing for some of the problems that they're faced with. And we know that we're not going to build everything under the sun. So because of that, what we want to do is to create basically a sticky ecosystem where our customers can access point solutions. And that then makes us more sticky for them. And at the end of the day.
Of course, right. So it's basically, instead of another company, a competitor being able to come in and say, well, we can do this that SAP can't.
Yeah.
And essentially do everything, even though you're not getting paid or owning all the parts of the solution.
Yeah, exactly.
Very cool. Very cool. So let's sorry, we got a little off track. I just think stuff like that is really interesting. So sorry. If we step back into kind of when you're choosing an investment, how much is it, you know, like the traction they've had? How much is it the founder? How much is it the team? What is it you're looking at when you're picking between these different opportunities?
So say that we're looking at two companies that are very similar and their traction is similar. A lot of it's going to come down to just the chemistry that you have with the founders and seeing if they're just people that you really can just dive into dive into problems with. It's much like starting a new business, right? The first time you're like, yes, we're going to go start this, and everything is very optimistic. It's very similar at the beginning of these types of relationships.
Right.
You want to be able to
Honeymoon
work with
phase.
those. Yeah, the honeymoon phase, exactly. Like, who can you see yourself working with even when the going gets tough? And it goes both ways.
Yeah.
It really, really does.
Very cool. Very cool. So when you're, if we look at the investment fund side, how do you kind of value a startup business like that? What kind of metrics do you use to, what is a fair kind of valuation of a smaller kind of startup, like you say, someone with maybe five employees? How do you value that?
Yeah. So, I mean, of course, we're looking at what revenue are they getting in terms of the customer traction that they have. What is the average customer value, the annual contract value. We're looking also, it's typically enterprise SaaS, so software as a service, that we're looking at. And so we look at metrics just such as repeatability. Are we also looking at just how long these types of subscriptions would be? Are these annual contracts? Are they 3 years long? Like, what type of moats can you build? So a lot of it is going down to the business model and obviously going down to the product and to be able to figure it out. Also, we invest alongside institutional VCs. So a lot of the times, like, the price is set by the institutional VCs, like we're coming on as a strategic. And so that's like another thing that we do. So, for those investors that are just starting out, that's a great way of just being able to, essentially piggyback off of diligence that others are doing and being able to take advantage of that.
Right. And so the institutional VCs are kind of pulling you in because you can open up all these other clients and actually help grow the company.
Right.
Right. All right. Very cool. Very cool. So if we take a final kind of question, if you're talking to a startup, someone who's just started out, what is kind of the one tip you give them to succeed? What is the difference between those startups that actually make it and all the, whatever it is, 80% that fail on the way?
Yeah. It is all about the hustle at the end of the day. It is about being persistent. You are going to get a lot of no's. You're going to hit a lot of roadblocks, but it's about picking yourself up, dusting yourself off, and just going to the next, like the next customer. Just try again. Look at things in a different way. Just really know when to pivot, really know when to say no, really know how to be diligent about your time. That's probably is like a summary of the lessons that I've learned over the years.
That's awesome. I love it. I really do. So thank you so much. Sadly, we're out of time. This was really, really interesting. If anyone wants to kind of learn more from you or connect with you, how would they go about it?
Yep, you can find me on LinkedIn, so Vanessa Liu, or on Twitter at Vanessa W Liu, Liu. You can also look at the work that we do at SAP.io, which is just sap.io on our website.
Cool. All right. Thank you so much for joining us. Thank you everyone for listening. I really appreciate it. I have an interesting update for you in a moment, so stick with us and I'll speak to you soon. Thank you so much, Vanessa.
Thank you so much.
Thank you so much for joining us. I hope you enjoyed this show. Vanessa is incredible, isn't she? It is so exciting to hear how they look at it, how they evaluate, and how they choose their investments. It's something that we as investors can learn from and use when we are bringing on investment capital. So remember, most of it is about the individual person rather than what's on the paper. And that is something to take with you when you're looking for investors. Make sure that you actually take the time to connect with them on a personal level. This has been mentioned in many of the episodes before, like with Chris Cooper, Justin Whitmore, Shimon Rudish, all of them mentioned this when raising finance, make that personal connection. And here we get it confirmed by an actual investor that the personal connection is super, super important. So this was very, very exciting. In our next episode, we are interviewing a new investor who shows that with a little gut, with a little guile, you can actually make your investment career happen faster than you could ever imagine. Timoteo Braga joins us on the Momentum Investing podcast. He's one of our students, and he proves that this works and that you can succeed. If you want to learn more about property investing, we have a free course called Momentum. You can find it at momentumgift.com. That's momentumgift.com. Kind of in the holiday spirit, right? It's a free course that will teach you the 3 simple steps to property investing so you can get started. If you would like to, just as Caroline and Staffan in our last episode, or Timoteo, take one of our more advanced courses, for example, our mentorship program, you could go to getmomentummentor.com. That's getmomentummentor.com to apply for the mentorship program. We'd love to have you. We'd love to support you. And I hope you're looking forward to this next episode as much as I am. It was incredible to hear of Timoteo's journey. So good luck. I'll see you next week. Make sure you subscribe to the podcast so you get an update when the episode comes out.